I want to bring you back to August of last year before Biden became president. And at that time, you thought that Biden wouldn't be bad for the stock market. You thought he'd be pretty benign. Have you changed your outlook now?
No, not yet. These proposals that in some ways he's beholden to a certain fringe element of his party. And so he has to rattle the chains regarding the whole theme of taxing the rich and raising corporate taxes. And I understand the political pressures, but the reality of that actually happening anywhere near the proposal he's making is very low, because it would make the United States the highest tax jurisdiction in the G20. And there'd be the reversions again, and capital would leave the country, and there'd be a lot of corporate, financial restructuring. And I don't think we want to go there. And I think members of his party knows that's not a good idea. So I think a much more tempered corporate tax rate is likely to come. And then, of course, we have this second leg, the infrastructure package, which both sides agree is desperately needed. It's how you package it, because in the current bill, you've thrown everything in the kitchen sink in there. And that's the old game in politics. And I think the market understands all that. This is just a normal yin yang that goes on between parties that are. And then you've got the fact that this is something for the market to think about. And I know others are thinking this way. When you look at history, and I'm a bit of a policy wonk, I go back and look at history, regardless of which party's in the White House. Doesn't matter. You tend to lose seats in the midterms. And so you really got a bit of a time pressure on here. If Biden wants to get anything done in a big stroke way, he has to get it done in the first 2 years of his mandate, because it's highly likely that he will be in a more precarious position, after these midterm elections. That's just the way it is. You tend to lose seats, so this really delicate balance of power gets shifted back for the check and balance that the U.S. has been so good at doing for so long. So I think I don't see a lot of risk of a crazy tax change, and I think the market's reflecting that.
Have you made any changes, Kevin, to your personal portfolio when you look at some of the policy proposals, the return to big government and big spending during the Biden administration? Even if it all doesn't pass, which is very unlikely, but even if some of it passes, has that sort of informed your portfolio decisions lately?
Yes, it has, since we last talked. I have removed hydrocarbons from my core holdings. I used to be a big shareholder in Chevron, Exxon, Schlumberger. They are all gone. And it's not that I don't love oil companies. I think they're a very viable part of the economy, and they're doing their hardest to clean themselves up towards the ESG mandates. But here's the problem. I have many companies that I'm an investor in that service institutional clients, whether it's involved in fintech, or whether it's in the ETF markets, whatever. We listen very closely to what our clients want. And today, institutions, they have sustainability committees. They have ethics committees that sit on top of their investment allocation committees. And so if you're bringing in an idea, let's go to a 3.5% weighting in Chevron, which is a fantastic balance sheet, by the way, you're probably going to get shot down. And why that should bother you as a shareholder is you always want a core position to have it. The incremental buyer should always be an institution, should always be a sovereign. They're the ones that provide liquidity. But all of a sudden, you start to see these stocks being removed. Even the Larry Fink letter of just a couple of weeks ago that slammed the sector around ESG concerns. This is a big problem, because what happens is you actually get a situation where, because you're losing the incremental buyer over and over and over again, as they duck out of hydrocarbons, your price earnings ratios collapse. They go down. The companies still deliver earnings, but the PE they trade at diminishes. So I would argue you're going to have an underperforming sector in energy this year, regardless of whether oil's $60 or $70. So that's a big move for me. I've also started to adjust for inflation, because I think another $2 trillion coming out of the helicopter sky being printed is going to show up in inflation somewhere. And I've reduced my holdings from 50-50 fixed income equity down to 70% equities now, and 30% fixed income. And I put on a 3% weighting in Bitcoin, which is new for me. And that was an interesting transaction.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
Yeah, well, I want to talk a little bit more about that. So you're finally now playing in the crypto space. Are you using it as a hedge when it comes to inflation? Why include that in the portfolio?
Well, I am using it as a hedge. I'm considering it as property, and I think it acts that way. I mean, it is volatile. There's no question about it. There is a big problem brewing in this space because I've mentioned this a couple of times. When I disclosed that I was moving to 3% weighting, I got a mountain of calls from institutional investors saying, "Wait a second, where are those coins from?" And I said, "Well, I mean, everybody knows you can tell the time of creation, but you can't tell location of creation." Because currently 60% of coins mined in Bitcoin come from China, where they don't care about sustainability, and they certainly have issues around human rights. And so there are many institutional clients that do not want to own so-called blood coin from China. And as a result, we've got a really interesting situation emerging that, the actual provenance of a coin over time, one that's mined sustainably, one that's mined in a jurisdiction that supports human rights and everything else, the ethics committee's approval could be worth more than just a generic coin that can't prove its provenance. And I'm not sure when that's going to happen, but I have certainly shifted my holdings. I don't own random, ETFs with blood coin in them. I know the provenance of where my wallet coins were mined now, and that means I've had to take equity positions in miners. I've had to start investing in them with the covenants in place that I would like to be paid back in a royalty of a clean coin. And I don't know if I'm the only person dealing with this. I suggest not. There is a huge problem going on in this industry, and you're going to see it come to a head at the June 4th, June 5th cryptocurrency here in Miami, crypto conference here in Miami. The industry has done a poor job in lobbying its case around sustainability. I spend a lot of time talking to CEOs of miners and various entities that want me to invest in their mining operations. Collectively, they've done a horrible job. They don't push back, and I'm hoping to be part of that solution. I'm trying to organize now a council of sustainability, certainly where I'll be investing in the companies that do set sustainable mandates. They will be the ones I invest in, and I would like to make them a showcase for the industry that we care about sustainability. There's no reason a North American miner can't lead the way and take away the leadership from the Chinese who do not mine sustainably. Now, that may not matter to you, but it matters to a lot of institutions. And until everybody gets on board and stops burning coal to create electricity to mine coin, it's going to start to have a huge differentiation like oil and water. We have got to fix this industry, and we also have to go back to our politicians in various jurisdictions, including Europe, including Canada, including in the States, where there's a threat now that some governors are talking about making Bitcoin mining illegal in their state if they don't clean up their act around sustainability. So this is a big, big issue in the crypto space right now.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.